So carrying on with our Chapter 16 financial statements, we have done the income statement, balance sheet, and statement of stockholders' equity. So now that the financial statements have been prepared, we have to do our final closing related items. And the first thing we're going to do is record closing entries for a corporation. So the closing entries that a corporation or all businesses record are the following. And if you recall, in the first trimester for a service business, a sole proprietorship, we had REID, R-E-I-D. REID was our closing entry acronym. And it still applies, it's just a little different. So we're looking at all income statement accounts that have a credit balance. So revenue has a credit, so that's still true. All the credit balances on the income statement. And then expense had a debit balance, so then we're doing all the accounts with a debit balance. And then we're getting rid of income summary again, which is just doing our net income or loss as our number. And then we closed drawing first trimester, but now it's dividends. So REID is still our acronym, and we're going to do 4 journal entries. You have in your notes this sheet, which is all the closing entries. And if it were me, I would probably just take notes on that and show that this first entry is the R, so all the credits, the E, all the debits, the I for income summary, but we're doing net income or loss, and then the D for dividends. There's your 4 entries. But I'm going to go through the kind of detailed slides with you here. So the first thing that we have, and this is just, I'm not even going to bother with this slide, to be honest. So we do the closing entry for accounts with a credit balance. This is our R, our revenue. So which ones have credit balances? So our 2 revenues, sales and interest income, and our contra expense accounts also have a credit. So we're just going to close every single income statement account that has a credit balance. And again, to close those, what do we need to do? We need to debit those accounts. Let me move my thing here. Debit those accounts for whatever amount they were. So debit them to get rid of them so that they'll be 0 after we post that. And when we add that up, our credit's going to go to this temporary account, holding account, that is called income summary. So that is our first entry, and that's really what this was trying to show you, was that sales had a balance of $632. We do a closing entry here, and then the new balance is 0. We would do that for all of those accounts that had a credit. And then that closing entry in total was $635,000 going to income summary. So that's your first closing entry. So then the next closing entry is the income statement accounts with debit balances. So again, everything starting at income summary on down that has a debit, we're going to get rid of it by crediting it. So again, all of those credits we're going to put down here to get rid of the debit balance that was there. Add all of those up and debit income summary. So that's the second entry. All the debit balances, expenses, and contra revenues are going to get credited. We'll put the total to income summary. And this again is just showing you for the biggest account purchases that it had a balance of $254. We closed it by crediting. The new balance is 0. And then in income summary, we had that beginning balance again that was in there. We closed revenue, the credit accounts. We closed expenses, the debit amounts. So our new balance now in income summary after we would post those first 2 closing entries is $79,896.57. So then the next thing we want to do is we want to close income summary. So we said that we had a new balance of $79,896. After we had done these first three, it had a credit balance of $79,896. So to get rid of it, this closing entry that I'm going to do is going to debit income summary to get the balance down to 0. Okay? And if you want to think of it like this, you certainly can. But if it were me, I would just think of it in this terms, next to this. I know from the income statement that I had net income of $79,896.57. I know net income is good. Net income would make retained earnings, my equity account, go up. So I credit retained earnings, I debit income summary. If I had a net loss is bad, and I would debit retained earnings, and I would credit income summary. So just like in the first trimester when we closed all these accounts, we closed it into capital. Instead, for a corporation, we're closing it into retained earnings. So I would make sure and note that in your notes. So in this closing entry, number 3, we're closing everything into retained earnings. The number I'm using is my net income or loss. If it is income, I'll credit retained earnings. If it's a loss, I'll debit retained earnings. And then this just shows kind of the relationship in general is I've debited expenses in a closing, credited revenue. If revenue is greater, I'll have a credit balance sitting in income summary and I need to debit it. So then the final and the fourth closing entry is the closing entry for dividends. So dividends has a normal debit balance. So the normal debit balance of $15,000, I need to get rid of it. So the way that I'll get rid of it is I'll credit dividends for $15,000 to get the balance to 0. And I will again close it into retained earnings directly. It reduces retained earnings because I gave dividends out to shareholders. So after I've done all 4, this is what it looks like. I've gotten rid of all my credit balances and temporarily put them in income summary. I got rid of all my debit balances from the income statement by crediting them and put it into income summary. Then the difference between what was already in income summary and these 2 postings is my net income or loss. Since I had net income, I'm crediting retained earnings and closing all my income, revenue, expenses into retained earnings in this 3rd entry. And then finally, I close my dividends straight into retained earnings. So it says here on the audit your understanding, where is the information obtained to journalize the closing entries? It all comes from the adjusted trial balance. What's the name of the temporary account that we use to throw all that revenue and expense in? Income summary. Again, we don't do that in real life, but we do in this book. And that is it for section 16.4. Read. R-E-I-D. Read. That's our closing entries. Everything ends up in retained earnings.